I get asked this question constantly. Should I buy MSTR stock or Bitcoin directly? It's the number one question in my mentions. It's what people ask me at conferences. It's what investors want to know. It's what financial advisors are trying to figure out. And I understand why it's confusing. Strategy owns over 713,000 Bitcoin. We're the largest corporate holder of Bitcoin in the world. Our entire treasury strategy is built around Bitcoin. So shouldn't buying MSTR stock be the same as buying Bitcoin? The answer is no. They're not the same thing. They're related, but they're fundamentally different investments with different risk profiles, different return profiles, different tax treatments, different liquidity characteristics. And today, I want to give you my honest answer to this question, not as a salesman trying to pump my stock, not as a Bitcoin maximalist with an agenda, but as someone who has spent years thinking deeply about this question, who has billions of dollars on the line, who understands both sides intimately. Because here's what most people don't understand. This isn't actually one question, it's 5 questions disguised as one. And until you understand what you're really asking, you can't get a meaningful answer. The 5 questions are, what returns am I trying to achieve? What risks am I willing to take? What's my time horizon? What's my tax situation? What's my conviction level? Different answers to these questions lead to different conclusions about whether you should buy MSTR, Bitcoin, both, or neither. Let me break it down for you completely. First, let's be clear about what MSTR actually is. MSTR is not a Bitcoin ETF. It's not a wrapper around Bitcoin. It's not just a way to get Bitcoin exposure in a brokerage account. MSTR is a leveraged bet on Bitcoin inside a corporate structure with software business, cash flows, convertible debt, preferred shares, and a complex capital structure designed to amplify Bitcoin returns. Let me explain what that means in practice. When you buy Bitcoin directly, you get exactly what you pay for. If Bitcoin goes up 50%, your investment goes up 50%. If Bitcoin goes down 30%, your investment goes down 30%. Simple, linear, predictable. When you buy MSTR stock, you're buying a company that uses multiple financial instruments to amplify its Bitcoin exposure. We issue convertible debt at low interest rates. We sell preferred shares with dividends. We do at-the-market equity offerings. We use all of these tools to acquire more Bitcoin than our equity alone could buy. This creates leverage, not margin leverage like a trader borrowing money, corporate leverage, structured leverage, intelligent leverage. The result is that MSTR's stock price moves more dramatically than Bitcoin's price in both directions. When Bitcoin is rising, MSTR tends to outperform. When Bitcoin is falling, MSTR tends to underperform. Over the past 5 years, MSTR stock has massively outperformed Bitcoin. We're talking thousands of percent returns compared to hundreds of percent returns. The leverage worked, the strategy delivered, but that outperformance came with higher volatility, bigger swings, more dramatic drawdowns, more risk. Right now, as I'm speaking, MSTR stock is down 47% year to date, while Bitcoin is only down 7%. That's the leverage working in reverse. That's what amplification means. It goes both ways. So the first thing you need to understand is this. MSTR is not Bitcoin. It's a leveraged vehicle that amplifies Bitcoin's returns through corporate financial engineering. That might be exactly what you want, or it might be exactly what you don't want. But you need to understand what you're buying. The second critical concept is the premium or discount to net asset value. MSTR's net asset value is relatively simple to calculate. Take the current market value of all our Bitcoin holdings, add our other assets, subtract our liabilities. That gives you the net asset value per share. The stock price can trade above this value at a premium, or below this value at a discount. For most of the past few years, MSTR traded at a significant premium. Sometimes 2x, sometimes 3x, at times even higher. That means investors were willing to pay twice as much for exposure to our Bitcoin through MSTR stock than the Bitcoin was actually worth on the open market. Why would anyone do that? Several reasons. First, access. Many investors can't or won't buy Bitcoin directly. They don't want to deal with wallets, private keys, custody solutions. They want to buy something in their regular brokerage account. MSTR gave them that option before Bitcoin ETFs existed. Second, leverage. Sophisticated investors understood that MSTR's capital structure was designed to amplify returns. They were paying a premium for that leverage effect. Third, optionality. MSTR stock has options chains. You can buy calls, sell puts, create sophisticated derivative strategies. Bitcoin itself has limited options markets. Fourth, management. Some investors believe that having Michael Saylor and the strategy team managing the Bitcoin treasury added value worth paying for. The premium made sense when Bitcoin was rising, when we were efficiently raising capital, when the leverage was working in investors' favor. But here's what happened recently. Bitcoin dropped below our average purchase price. Our holdings went underwater, the stock fell dramatically, and the premium disappeared. Now, MSTR trades at a discount to our Bitcoin holdings. The stock is worth less than the Bitcoin we own. The market is saying our corporate structure, our debt, our complexity is actually destroying value rather than creating it. This changes everything about the investment decision. When MSTR traded at a 2x premium, buying Bitcoin directly was clearly better value. You got the same Bitcoin exposure for half the price. The premium didn't make sense for most investors. Now that MSTR trades at a discount, the calculation reverses. You can buy Bitcoin exposure through MSTR stock for less than the Bitcoin is worth on the open market. That's a value proposition, but it comes with a question: why is the market pricing us at a discount? What risk is being priced in that you need to understand? Let me be very direct about the risks of buying MSTR stock. Risk number one, our debt. We have over $8 billion in convertible debt. These are bonds that can convert into MSTR shares under certain conditions. The first significant maturity date is in Q3 2027. If Bitcoin stays low, if our stock stays depressed, we'll need to either refinance that debt, convert it to equity diluting shareholders, or pay it off with cash. All of these options are manageable, but they create uncertainty. We have $2.25 billion in cash reserved for dividend payments and operations. We're not at risk of bankruptcy at current Bitcoin prices, but if Bitcoin dropped to $25,000 or below, we'd face real financial stress. That's a risk Bitcoin holders don't have. If you own Bitcoin directly and the price drops to $25,000, you don't have debt to service, you don't have convertible notes maturing. You just own Bitcoin that's currently worth less than you paid. Risk number two, dilution. We've funded our Bitcoin purchases by issuing new shares at the market offerings, preferred stock. This dilutes existing shareholders. You own a smaller percentage of the company over time. When we can issue shares at a premium to our Bitcoin holdings, this is accretive. We raise $1 billion by issuing shares. We buy $1.5 billion worth of Bitcoin value. Shareholders benefit. But when we issue shares at a discount, it's dilutive. We raise $1 billion by giving away $1.2 billion in Bitcoin value. Shareholders lose. Right now, with our stock trading at a discount, we can't effectively raise capital through equity offerings without hurting shareholders. That limits our ability to buy more Bitcoin. That's a strategic constraint Bitcoin holders don't face. Risk number 3, forced selling. We've been very clear that none of our Bitcoin is pledged as collateral. We don't have margin requirements. We won't be forced to sell Bitcoin just because the price drops. But in extreme scenarios, if Bitcoin dropped dramatically and stayed low for years, if our debt became unmanageable, we could theoretically be forced to sell Bitcoin to meet obligations. Bitcoin holders don't have this risk. You can hold Bitcoin through any price drop for any length of time with zero pressure to sell. You can wait decades for recovery if needed. Risk number 4, management risk. When you buy MSTR, you're trusting me and my team to manage the company well, to make smart capital allocation decisions, to navigate the debt structure, to time our Bitcoin purchases reasonably well. What if we make mistakes? What if we mismanage the debt? What if I get hit by a bus and the next management team doesn't share the Bitcoin conviction? Bitcoin holders don't have management risk. Bitcoin is Bitcoin. It doesn't depend on any company, any CEO, any management team. These are real risks. I'm not minimizing them. If you can't stomach these risks, you shouldn't buy MSTR stock, buy Bitcoin directly instead. Now let's talk about returns, because this is what most people actually care about. Historical returns are clear. MSTR has massively outperformed Bitcoin over any multi-year period. From August 2020, when we started buying Bitcoin, until now, MSTR stock has delivered somewhere around 3,000 to 4,000% returns, depending on exact timing. Bitcoin itself delivered around 400 to 500% over the same period. That's the leverage effect. That's what corporate financial engineering can do when executed well during a bull market. But here's what you need to understand. Past performance doesn't guarantee future results. The conditions that allowed us to outperform Bitcoin dramatically may not persist. When Bitcoin was rising from $10,000 to $100,000, we could issue debt at 0 to 2% interest rates and buy an appreciating asset returning 900%. The spread was enormous. The strategy was a no-brainer. When Bitcoin drops below our cost basis, when our stock trades at a discount, when we can't efficiently raise capital, the dynamics change completely. Future returns depend on several factors. Factor 1, Bitcoin's price trajectory. If Bitcoin goes to $500,000, MSTR will likely outperform. If Bitcoin stays range-bound at $70,000, $90,000 for years, MSTR will likely underperform. Factor 2, our ability to raise capital efficiently. If we can continue issuing debt and equity at favorable rates and buying more Bitcoin, the leverage compounds. If we can't, we're just a company holding Bitcoin with extra costs and complexity. Factor 3, the premium or discount. If our stock returns to trading at a premium, that itself creates returns independent of Bitcoin's price. If we stay at a discount, that's a drag on returns. Factor 4, our operational performance. We do have a software business generating around $500 million in annual revenue. If that business grows, it adds value. If it shrinks, it subtracts value. My honest assessment, if Bitcoin goes up significantly from here, MSTR will likely outperform. But the magnitude of outperformance will probably be less than in the past because our scale makes capital raising more difficult and our leverage ratio is already high. If Bitcoin goes sideways or down, MSTR will likely underperform, potentially significantly. Taxes matter enormously in this decision, and most people completely ignore them. When you buy Bitcoin directly, you pay capital gains tax when you sell. If you hold for more than a year, you pay long-term capital gains rates, 0%, 15%, or 20%, depending on your income. If you never sell, you never pay taxes. You can hold Bitcoin for decades, watching it appreciate, and owe nothing to the government until you actually sell. Even better, when you die, your heirs get a stepped up basis. If you bought Bitcoin at $30,000 and it's worth $500,000 when you die, your heirs inherit it at $500,000. The $470,000 gain is never taxed. Generational wealth transfer with zero capital gains tax. MSTR stock has the same long-term capital gains treatment and the same stepped-up basis at death. So far equal. But here's where it gets different. MSTR stock generates no income. We don't pay dividends on common shares. You only pay tax when you sell. Bitcoin also generates no income if you just hold it. Also equal. But MSTR's corporate structure means we're constantly creating taxable events for sophisticated strategies. If you're trading options on MSTR, those can be short-term capital gains taxed at ordinary income rates up to 37%. If you're in and out of the stock trying to time it, you're paying short-term capital gains on winners. Bitcoin in cold storage, held for decades, is incredibly tax efficient. MSTR stock held for decades is similarly tax efficient. But the temptation to trade MSTR because of its volatility leads many investors to create unnecessary tax bills. There's also the estate planning angle. Bitcoin can be stored with a private key that you memorize, 12 words. Your entire wealth, completely private, transferable across borders, inheritable with zero government visibility. MSTR stock is registered in the traditional financial system. It's visible. It's trackable. You can't move it across borders by remembering 12 words. For most Americans, this doesn't matter. For people in countries with capital controls, political instability, or authoritarian governments, this matters enormously. Liquidity is another critical factor most people don't consider carefully. MSTR stock is incredibly liquid. Hundreds of millions of shares trade daily. You can buy $10 million of MSTR in seconds without moving the market. You can sell instantly at market price. Bitcoin is also liquid, but it depends on how much you're buying and where you're buying it. If you're buying $1,000 worth of Bitcoin on Coinbase, the liquidity is fine. You'll pay a small spread, execute instantly, no problem. If you're buying $10 million worth of Bitcoin, you need to think more carefully. You'll need an OTC desk to avoid slippage. You'll need secure custody. You'll need proper insurance. It's doable, but it's more complex. For most retail investors, Bitcoin's liquidity is sufficient. For institutional investors or very wealthy individuals, MSTR's liquidity in traditional markets can be advantageous. There's also the regulatory comfort factor. Many institutions feel more comfortable buying a NASDAQ-listed stock than buying Bitcoin directly. They have policies, compliance departments, risk committees that approve stocks but not cryptocurrencies. MSTR gave these institutions a way to get Bitcoin exposure without actually buying Bitcoin. That mattered a lot before Bitcoin ETFs existed. Now that Bitcoin ETFs exist, this advantage has diminished significantly. You can buy Bitcoin exposure in a traditional brokerage account through IBIT or FBTC. You don't need MSTR for access anymore. This changes the investment thesis for MSTR pretty dramatically. Here's a factor that's completely psychological, but incredibly important. Conviction. When you buy Bitcoin directly, your conviction is tested differently than when you buy MSTR stock. If Bitcoin drops 40%, you see your Bitcoin holdings drop 40%. It hurts, but you still own the same amount of Bitcoin. You own 1 BTC before the drop, you own 1 BTC after the drop. Nothing changed except the dollar price. If MSTR stock drops 60% when Bitcoin drops 40%, you see your portfolio destroyed. You start questioning everything. You start wondering if you made a mistake buying the stock instead of Bitcoin. You start reading articles about our debt, about dilution, about financial engineering gone wrong. The psychology is completely different. I've noticed that Bitcoin holders tend to have stronger conviction through bear markets than MSTR shareholders. Bitcoin holders understand they own a fixed amount of a scarce asset. MSTR shareholders are constantly worrying about corporate decisions, debt management, dilution, premiums, and discounts. If you have deep conviction in Bitcoin but don't fully understand corporate finance, you'll probably be better off buying Bitcoin directly. You'll be more likely to hold through volatility. If you understand leverage, if you understand corporate capital structures, if you can stomach the additional complexity and risk for the potential of higher returns, then MSTR might make sense. But you need to be honest with yourself about your own psychology. One advantage MSTR has that many people overlook: custody. When you buy MSTR stock, you don't have to worry about custody of Bitcoin. We handle that. We have institutional grade custody solutions. We have insurance. We have security protocols. You can't lose your MSTR shares because you forgot your password. You can't have your MSTR stock stolen because you fell for a phishing attack. You can't accidentally send your MSTR shares to the wrong address and lose them forever. These risks sound trivial to Bitcoin veterans, but they're very real for newcomers. Billions of dollars in Bitcoin have been lost forever because people lost their private keys. Billions more have been stolen in exchange, hacks, personal attacks, phishing scams. If you're not confident in your ability to secure Bitcoin properly, if you don't want to learn about hardware wallets and multi-sig and custody solutions, if you just want to buy exposure and not think about it, MSTR eliminates this entire category of risk. But you're replacing custody risk with corporate risk. You're trusting that strategy doesn't get hacked, that we maintain good custody practices, that we don't mismanage the Bitcoin. So far, we've never had a security incident. We've never lost a single Satoshi. Our custody practices are institutional grade. But the risk exists. With Bitcoin, you are your own bank. That's empowering if you do it right. It's catastrophic if you do it wrong. With MSTR, you're trusting a corporation to be your bank. That's comfortable for many people. It's uncomfortable for Bitcoin purists who believe self-custody is the entire point. Let me walk through specific scenarios to make this concrete. Scenario 1, Bitcoin goes to $500,000 over the next 5 years. In this scenario, Bitcoin holders roughly 7x their money, life-changing. If you have significant exposure, MSTR shareholders might 15x their money because of the leverage effect, assuming we continue to raise capital efficiently and amplify our Bitcoin holdings. Winner, MSTR, potentially significantly. Scenario 2. Bitcoin stays between $70,000 and $100,000 for the next 5 years. In this scenario, Bitcoin holders have flat to modest returns. MSTR shareholders likely have negative returns because of the cost of our debt, the drag from our corporate structure, and the opportunity cost of capital. Bitcoin, clearly. Scenario 3. Bitcoin drops to $40,000 and stays there for 3 years before recovering. In this scenario, Bitcoin holders are down 50% but can hold comfortably with no pressure to sell. MSTR shareholders are down 70-80%, facing questions about our debt management, worried about dilution, potentially facing forced selling in extreme cases. Bitcoin, very clearly. Scenario 4. Bitcoin drops to $25,000 and stays there for 5 years. In this scenario, Bitcoin holders are down 70% but can hold indefinitely. MSTR faces serious financial stress. Our debt becomes problematic. We may be forced to sell Bitcoin. Shareholders could lose most of their investment. Bitcoin, overwhelmingly. The pattern should be clear. MSTR amplifies returns in both directions. In strong bull markets, MSTR wins. in flat or bear markets, Bitcoin wins. Your decision should be based on your conviction about which scenario is most likely. So, after all of that, what's my actual recommendation? Here's my honest answer. For most people, buying Bitcoin directly is the better choice. I say that as the CEO of a company whose stock price benefits when people buy MSTR instead of Bitcoin. I say it anyway because it's the truth. Here's why. Most people don't have the risk tolerance for MSTR's volatility. They don't understand corporate leverage. They'll panic and sell at the worst possible time. Most people aren't sophisticated enough to evaluate whether MSTR is trading at an attractive premium or discount. They'll buy when the premium is high and we're overvalued. Most people have long time horizons and should optimize for simplicity and certainty rather than trying to juice returns with leverage. Most people would be better served by self-custody of Bitcoin, learning the skills, taking responsibility for their own financial sovereignty. But there are scenarios where MSTR makes sense. If you're a sophisticated investor who understands leverage and can evaluate corporate capital structures, and you believe we're currently undervalued relative to our Bitcoin holdings, MSTR at a discount could be attractive. If you're in a retirement account that can't hold Bitcoin directly but can hold stocks, MSTR gives you exposure where you otherwise would have none. If you're an institutional investor with policies that prevent direct Bitcoin ownership but allow listed stocks, MSTR might be your only option for exposure. If you want to trade options and employ sophisticated derivative strategies, MSTR's options chain enables strategies. Bitcoin itself doesn't. If you have very high conviction in Bitcoin's upside and want leveraged exposure, MSTR provides that without the risks of personal margin trading. But for the average person, buy Bitcoin, hold your own keys, learn the skills, take responsibility. Let me summarize everything as simply as possible. MSTR is not Bitcoin. It's a leveraged corporate vehicle that amplifies Bitcoin's returns in both directions with additional complexity, costs, and risks. When Bitcoin is rising strongly, MSTR tends to outperform. When Bitcoin is flat or falling, MSTR tends to underperform. MSTR makes sense for sophisticated investors who understand the risks and can evaluate whether the stock is trading at an attractive level relative to its Bitcoin holdings. Bitcoin makes sense for almost everyone else. It's simpler, cleaner, eliminates corporate risk, eliminates management risk, provides true self-sovereignty. The question isn't which one is better in absolute terms. The question is which one is better for you, given your knowledge, risk tolerance, time horizon, tax situation, and conviction level. For me personally, I own both. I own MSTR stock because I'm the executive chairman and I believe in what we're building. I also own Bitcoin directly because I believe in self-custody and financial sovereignty. But if I had to choose only one, if I had to give advice to my family members who aren't finance professionals, if I had to make a recommendation to someone just starting their Bitcoin journey, I'd tell them to buy Bitcoin, not MSTR. Bitcoin. Learn how to secure it properly. Learn about hardware wallets. Learn about private keys. Take responsibility for your own financial future. And if years from now, after you've accumulated a position in Bitcoin, after you understand the asset deeply, after you've studied corporate finance and leverage and capital structures, if at that point you want to add MSTR exposure for potential amplified returns, then consider it. But don't start with the leverage product. Don't start with the complex corporate structure. Don't start with something you don't fully understand. Start with Bitcoin. The simplest, cleanest, most pure expression of the monetary revolution we're living through. That's my honest answer. That's what I'd tell my own family. That's what I'm telling you. Choose wisely.